Welcome to Tony Byrne's View with news you can use. Tony has over 32 years of experience as a chartered financial planner and wealth manager. Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
The simple way to save up to £260,000 inheritance tax every 7 years. Inheritance tax, or IHT, remains a largely voluntary tax because there are a myriad of ways to legitimately avoid paying it. Solutions may be simple or complex, expensive or low cost. In my experience, most people prefer simple and low cost solutions. Gifts between spouses and civil partners are exempt from inheritance tax. However, gifts to other family members, unless using one or more of the available gifting exemptions, are only exempt from inheritance tax if you survive for 7 years after making them. Lifetime gifts into most types of trust are potentially subject to a lifetime inheritance tax charge of 20% on the excess of the gift above your unused nil rate band of £325,000, with further inheritance tax potentially payable if you do not survive 7 years after making the gift. Of course, married couples / civil partners are entitled to 2 nil rate bands, meaning a combined total of £650,000. So as long as your cumulative non-exempt gifts over a 7-year period do not exceed £325,000 each, assets can be gifted by you to, say, your family without attracting an inheritance tax charge on the gifts themselves, although they will use up your nil rate band for 7 years. Gifts made directly to other individuals are known as pets or potentially exempt transfers. A pet escapes inheritance tax altogether if you survive more than 7 years after the date of the gift. Otherwise, it becomes chargeable. Pets are not liable to the lifetime rate of inheritance tax of 20%, which is half of the death rate of 40%, as they only become chargeable on death within 7 years. So if you gift up to £325,000, your nil rate band as it is known, every 7 years and survive for 7 years each time, you save £130,000 in inheritance tax, which is 40% of your nil rate band of £325,000 that you would have paid had you kept that amount of money in your estate on death. Your spouse or civil partner also has a nil rate band, which is an inheritance tax-free allowance, which he or she could use to gift up to £325,000 every 7 years too. So combined, you could save up to £260,000 IHT every 7 years. Repeat the process every 7 years so that you save £520,000 inheritance tax after 14 years, £780,000 after 21 years, and £1,040,000 after 28 years. Start the process in your mid-50s and you will have not only gifted £2.6 million, which is the nil rate band of £325,000 times 2 times 4 years. By your early 80s, you would have saved more than £1 million in inheritance tax too. Sounds too good to be true? Not really. This is perfectly acceptable and legitimate estate planning. It's also very simple as long as you avoid the pitfalls along the way. So what are the potential pitfalls? Falling foul of the 14-year rule for inheritance tax. I'll explain that in a moment. Gifting wealth to family members and subsequently regretting your decision. Gifting so much wealth that you impoverish yourself, for example, underfunding care fees, which you need later. The 14-year rule is where it becomes more complicated. The inheritance tax computations will include any chargeable gifts that were made in the 7 years before a chargeable gift was made. A chargeable gift meaning either a chargeable lifetime transfer, a CLT, into trust, or a failed pet that has become chargeable. This basically means that any chargeable gifts made up to 14 years before the donor's death could affect the overall inheritance tax payable. This rule is there to ensure that gifts which become chargeable are taxed appropriately. A failed pet arises where the donor gifts an asset which is, at the time of the gift, a potentially exempt transfer, but the donor then dies within 7 years of making the gift, so that the pet becomes chargeable to inheritance tax. The pet will then use up some or all of the donor's nil rate band, resulting in more IHT on the estate, and any pet above the nil rate band, when added to chargeable lifetime transfers or failed pets within the 7 years before it, is subject to inheritance tax on the recipient of the gift. Gifts which are made into discretionary trusts are CLTs or chargeable lifetime transfers, but as long as they are no more than £325,000 per person every 7 years, then no lifetime IHT is payable, but on death within 7 years, they're included for inheritance tax purposes. So it is essential to get tax advice from an estate planning tax specialist. Although each individual is only entitled to one £325,000 nil rate band on death, each person can in fact utilise one NRB every 7 years, so multiple IHT free allowances of £325,000 can be claimed throughout the donor's lifetime. There are, of course, a myriad of ways to save inheritance tax, but this is one of the simplest ways to do it, and it avoids the complexity of many alternative inheritance tax mitigation strategies. Simple and low cost. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.